it has grown fairly consistently over time. This is pretty much what we want to see. You know, we started here in 2016, at the end of 2016 at about $600 million of revenue. And in 2020, they've pretty much tripled that. G'day guys, welcome back to the Devon Too Good Investing channel. On my channel, I like to analyze different stocks. And in particular, in this video, we're going to be looking at Corsair gaming stock. Ticker symbol CRSR. So what we're going to be doing is we're going to do a stock valuation. We're going to analyze this business and we're going to go through a 10-step analysis checklist to see if Corsair gaming is something that we can consider as an investment. So guys, for full disclosure, I do own Corsair gaming stock and I do think that the stock will do well over time. So obviously I could be biased, so always take that into account. But if we have a look at sort of the analysis now, so Corsair Gaming, they are a fairly, small stock. Think about it, Logitech's about $20 billion, but Corsair Gaming is about $2.48 billion in market cap. And they sell gaming and streaming peripherals as well as computer components. And they are a reasonably fast-growing company. They're growing revenues 24% year over year. That's from their Q2 results. And that is, following up from a seasonally sort of high quarter when they had the pandemic. So they are backing up really strong from the pandemic. And they own some really good brands. So not only do they own the Corsair brand, but they also own Elgato, which they acquired a couple of years ago. You'll see that they got a bit of debt on the balance sheet because of this acquisition, but we'll touch on that later. They also own Scuff, and they do custom controllers, mainly for consoles, and also Gamer Sensei, and that's pretty much a esport training, online training platform where amateur gamers can go get trained by esport professionals, and it's pretty much a service that people can pay for. And Corsair Gaming, they sit within the gaming industry. And the gaming industry is, really big. It is a multi-billion-dollar industry. And is one that's going to keep growing, for many years to come, if not at least the next 10 years. And also Corsair Gaming, they appeal to the hardcore gamer out there. And at the moment, Corsair Gaming stock is trading at $26.41. And you can see since they've IPO'd, they're up about, roughly 50%. So the first thing I like to do is have a look at how to categorize Corsair Gaming stock. So you can choose out of slow grower, stalwart, fast grower, cyclical, turnaround play, or asset play. And I think in this situation, it is very obvious to me that Corsair is a fast grower, and the reason why we want to identify our stocks according to one of these categories is it helps us contextualize some of this data that we're going to look through later, and it also is going to help us value the company at the end by applying an appropriate terminal multiple. Obviously, if it's a slow grower, it deserves a smaller multiple, but if it's a fast grower, it might deserve a higher multiple depending on the fundamentals of the business. So the second step of the checklist is to check revenue growth. So revenue is the amount of money generated by the sales of goods or services, and we want to see this growing over time. So if we go over the ticker terminal, this is a great website to check financials of companies, and you can click on different lines of the income statement or balance sheet, and it will bring up a nice chart of what it's done over the last 5 years. And we can see with revenue for Corsair, it has grown fairly consistently over time. This is pretty much what we want to see. We started here in 2016, at the end of 2016 at about $600 million of revenue. And in 2020, they've pretty much tripled that. So that is a fairly good revenue growth over time. We did see a bit of slowdown in between 2017 and 2018. So this might be a good thing to check if you want to find out more about this company. And, we probably want to know why this revenue decreased. And you can see in general, if we look at the change in revenue year over year, they have some years where they grow, mid-teens sort of revenue. They've had 1 year when it's been slightly under 10%, then they've had two crazy years when they've grown 43 and 55%. Personally, I think Corsair probably will grow in the mid-teens on average for the next 5 years in terms of revenue. We know that after this, this quarter they grew at 24%, which is really good considering that was off the back of a COVID quarter. So, look, Corsair Gaming gets a tick for me in terms of revenue growth. The third step is to check gross margins. So gross margins is the revenue minus the cost of goods sold divided by the revenue times 100 to bring it into a percentage. So a growing gross margin indicates a competitive advantage, and if the gross margin is decreasing, it usually indicates that competition in the space is increasing. In terms of gross margins, we can see that Corsair's gross margin was decreasing only slightly over time. And then in the COVID quarter, they had a big jump up to 27%. This is probably because there was a lot of demand that got pulled forward, and Corsair were able to possibly sell their products at a higher cost. But it's also because of the acquisition of Elgato. And if you look into the business, you'll find that the streaming products and the gaming peripherals actually have higher gross margins than the computer components, which Corsair was selling more of, in these earlier years. So I do expect this gross margin to actually, stay higher than sort of 22% going forward, especially because the streaming part of their business is actually growing a lot faster than their computer component part of their business. So based off that, Corsair Gaming gets a tick for me in terms of gross margins. Step 4 is to look at free cash flow growth. So free cash flow indicates the amount of cash generated each year that can be used for reinvestment, buybacks, or dividends. And all free cash flow is operating cash minus capital expenditure. So this graph actually shows us the free cash flow per share. And this only goes back 4 years. But we can see that Corsair's free cash flow used to be negative. And then recently it has become positive, and the company is quite profitable now, which is good to see. So they've gotten over this sort of baby phase of the company, and now they're starting to provide some cash flow to its shareholders. I do think that, this is a huge jump here. This is like a 500, it's like a 500% jump right here in free cash flow per share. I do think this will pull back a little bit for 2021. This is mainly just because of the crazy sort of pandemic year that brought forward a lot of demand for Corsair products. And right now, Corsair are facing some short-term issues surrounding shipping and some inflation costs. So that will probably reduce their profitability a little bit. But I think this will be in and around probably $1.60 per share. That's my estimate. But in terms of cash flow, look, this is probably something that if you haven't looked much into the business, this is probably something you want to analyze a bit further. For me, I'm fine with it because I've done my due diligence, but this is something you probably want to watch. Fifth step is to check ROIC, in other words, return on invested capital. And what this tells us is that it pretty much tells us how effective the management are at investing capital back into their own business to grow the business even more. And we really want this, at least 10% or higher, if not 15%. So let's go have a look. And in the case of Corsair, we can see the numbers are extremely choppy in terms of return on invested capital. You can see that they had, a couple of really great years where they've done almost 40%. And then in other years, they've done 20%. Then they've had a few poor years where they've done, 3-4%. So this isn't really what you want to see. You want to see consistent return on capital, 10% or higher. So just because Corsair is a new company, and it is quite common for new companies, well, it's not that new of a company, but it's new in terms of being on the stock market. So it is quite common for newish companies to have, these low numbers here initially, and then once they become more profitable, it generally increases. So for me, this is something to keep watch. But if you're new to investing, this should be a red flag to you. Is to have a look at how well the management is handling debt. So we want to see a current ratio above 1. And we also want debt to be payable within less than 3 years worth of free cash flow. So what current ratio is pretty much your short-term assets divided by your short-term liabilities. And as we discussed before, we want to see this above 1. And Corsair Gaming is generally, they're hovering their balance sheet at around sort of 1.5 to 1.3. And that sort of area there. And for me, that gets the tick. That's good to see. This chart here shows us Corsair's long-term debt. And we can see they used to have 503 million of long-term debt. And this was mainly because of the Elgato acquisition they made. And you can see that over time they have been quite aggressively paying this down. So Corsair Gaming's management is quite prudent when it comes to paying back debt. This has always been one of their priorities, which is good to see because it's very hard for a company to go bankrupt if they don't have any debt. In terms of how much years of free cash flow, Corsair Gaming, let's have a look. Let's go to the cash flow statement and we can see the cash from operations. So it's about 3 years. It's about right on the threshold for how much debt, but because they are paying it down quite prudently and they're not mucking around with it, this gets a tick for me. I'm happy with that. The 7th step is to look at insider ownership. So we want a management team who owns significant amounts of their own stock. And it's also really good when we have a founder-led CEO because they tend to outperform other CEOs. And we want to see that they have reasonable salaries and reasonable stock compensation. So for the sake of this video, we're going to focus on the CEO. So Andrew J. Paul is the CEO of Corsair Gaming. He's got an estimated net worth of at least $96 million. And we know Andy Paul, he owns 409,000 units of Corsair Gaming stock worth over $68 million. And he has sold a little bit of stock over the past few years, but if we compare the amount of stock he owns to his salary of $700,000, you can see that he owns a lot more stock than his salary. So this gets past me. I'm very happy with that. And not to mention, he's also the founder and he's still the CEO. So this thing's like his baby. Now, step 8 is to check shares outstanding. So shares outstanding is the amount of pieces in the company that is pretty much divided between all the shareholders. And we want to see this decreasing over time. Because if it's increasing, that means we're getting diluted and our percent ownership in the company is actually decreasing. So we want to see the amount of shares decreasing over time. So in terms of shares outstanding, we can see that in general, it has decreased since 2017. However, since 2018, the shares outstanding have been increasing. I think the increase in shares outstanding compared to 2019 to 2020 is because the company IPO'd, so they would have raised a bit of capital when they, IPO'd into the New York Stock Exchange, the Nasdaq. So this for me is something to watch. In my personal opinion, I don't think Corsair will dilute the stock more as they are now quite profitable. And I think they'll become more profitable over time. So for me, it seems unlikely that they'll have to dilute shareholders. But for me, this is something to watch, but it's something that I'm not overly worried about. So step 9 is to see if any super investors own the stock. So super investors are pretty much value investors with long, strong track records and proven returns. And in general, if they own the stock, it could mean that it might be a good investment and that we should pay more attention to this stock. So let's have a look and see if any super investors own Corsair Gaming. So in terms of super investors, there are 0 super investors who own Corsair Gaming stock. So this is a bit of I wouldn't say it's a red flag, but it's maybe something, if you're a new investor, you might want to look at stocks that super investors own, as it gives you an extra layer of protection, and you can also follow these super investors in and out of stocks, if you choose to do so. One thing that we should probably take note is there's been quite a lot of insider selling over the last 6 months, so that is something to also keep in mind. The last and final step is valuation, and pretty much no business is worth an unlimited amount of money, and paying too much for it can lead to bad returns. So what we need to do is we need to work out how much the business is worth, and then we want to pay less than that amount. So let's do it. So for the valuation of Corsair, I've entered in the free cash flow from the previous year, and then I've entered a bunch of growth rates that I think Corsair can achieve over the next 5 years. And I think the most realistic one is probably 14%. That's my sort of base case. And then, if you're more bullish, maybe you'd choose 18%, or if you're a bit more bearish, maybe you'd choose 10%. But I do think 14% is fairly reasonable. I've applied a terminal multiple of 20, so this is pretty, this is a pretty fair multiple for a growth stocks such as Corsair in the growing gaming industry. And then we're going to demand a return of 22%, because over 10 years, 15%, that's my minimum amount. That will return you a 4x on your money. But because we want to be conservative and have a margin of safety, we're going to aim for 22%, which is 8x your money. And then we've also entered in our shares outstanding. So based on the base case, Corsair Gaming is a buy at $26.61. So that's why I've been buying this stock and having ownership in Corsair Gaming. Its valuation is very compelling. So that gets the tick for me for valuation. So overall, Corsair Gaming is in a very fast growing industry, obviously the gaming industry. The valuation is very compelling, and at the moment I think it's quite likely that you may receive a return of about 22% per year. However, it does have no super investors, so there's no layer of protection there. And we probably need to watch the free cash flow, the return on invested capital, and the shares outstanding to make sure that these metrics, don't get worse and that they actually improve over time. But also, we're going to keep in mind that Corsair's margins should also increase as shipping costs decrease, which should allow more money to sort of flow down to the bottom line, which should increase the free cash flow. But anyway, guys, I hope you enjoyed this analysis of Corsair Gaming. Make sure you like, make sure you subscribe, and I'll hit you up more with more videos like this. So thanks for watching. See ya.